So they lobbied, fancy word for corruption. They paid millions and millions of dollars. Bitcoin's fair value, as you said earlier, is around 95K, maybe 98, somewhere in the high 90s. What's enough? And then I would still try to focus on equity.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.
That we could use voice over internet protocol, right? The base layer of the internet, TCP/IP, that we could exchange voice and data and pictures and video for free. For free. They liked charging $3 a minute for long distance. So they lobbied, fancy word for corruption. They paid millions and millions of dollars into DC to get a bill drafted that would have made that illegal, literally illegal. And it was 50-50, and Al Gore cast the deciding vote to say, nope, we're not going to pass this bill. And so the internet was unleashed to basically, liberate all that money that was tied up in media and commerce. So what's happening now is, why does, Jamie Dimon say it's a fraud? Why does Warren Buffett call it rat poison squared? I'm like, what is? I said, this is going to be the beginning of bear market, because once you have futures, you can do what's called spoofing. You can short naked this asset that you don't own. Like in the old days, if I wanted to deliver you oil, I had to have oil. When the futures markets come along, you can write a contract saying, I'll sell you oil unless we settle up the contract before it finishes. And there's a very important reason why Bitcoin was classified a commodity, not a security. So we'll come back to that. So what Buffett says that, so it's 2018, price is 20,000, goes to 10. And then if you remember, it fell all the way to 6 in the spring. And then in November, it took the final puke to 3,200. When it hit 3,200, Pomp and Jason and I issue in commodities. Well, they allow suppression of price. We all know what happened with gold and GLD, right? So GLD, gold price was going up. Remember, it was $200 and it was going to 300 and it got to 400. And everybody's like, yeah, let's do GLD. And 3 years, JP Morgan fought GLD. Now, why is JP Morgan? Well, JP Morgan happens to run the largest desk in London and in gold price making. And they were reported, Scott Besson, actually, our new Treasury Secretary, had done all the work on this. They're pretty much short a lot of gold, like a lot. And they needed someone to take the other side. So once they got their shorts in position, they're like, okay, fine, you can approve the GLD. Destroy capital. They're really profitable for the people that structure them, but not if you hold them. It's like a triple levered, short ETF. They destroy capital because of the rebalancing and this roll yield between futures and spot. So we're in this thing where a year ago, the ETFs get approved and everybody's like, oh, it's going to be great. The price is going to go straight up. And we went up in anticipation. And then when it happened, because no one was talking, Anthony, about the same day, January 10th, the exact same day, not a coincidence, the CME listed massive numbers of new Bitcoin futures. So what's happening is every time someone is accumulating, these big dogs short the future, and that caps the price movement. Second thing that's going on is I do believe, and I don't know if it's Buffett, I don't think it's Buffett, but somebody has changed their mind. In my opinion, somebody, and whether that's nation states or whether that's other billionaires, somebody has changed their mind and they want to accumulate. And they don't want to accumulate at high prices, they want to accumulate at low prices. So what do? You unleash the bots on all the leveraged speculators. See, here's the problem. So here's my outlook for the year. So Bitcoin's fair value, as you said earlier, is around 95K, maybe 98, somewhere in the high 90s. What's the low fair value? Who buys it? People like you and me and all the other people we traffic with, investors. We like to buy stuff on sale. We like to buy things below their fair value. That's what we do. Okay. And what does that do? That slowly pushes the price toward fair value. Now, as the price starts to move, who gets involved? Traders. Traders don't really care about fair value. They just want movement. They want to scalp a little here or there, up, down. They don't really care. They just want movement. Then who comes in? As we start to get towards fair value, and maybe we can get a little bit above fair value, well, then the speculators come in. Well, who's a speculator? Speculator is the opposite side of a hedger. So if the price is fair value, and I'm a miner, okay, and I can produce it, but they don't. Why not? Because they're like, well, then I just won't sell. And I'll force the bid up in order for me to sell. So after the halving event, we see this basic doubling of fair value, okay, this doubling of price. Well, that increase attracts the speculators. So the halving event happens when we're below fair value because of the fourth cycle. So that first part of the cycle is that recovery from winter, and it starts to move toward fair value. Then we get into what's called crypto summer, which we're starting to get close to fair value, and the halving event occurs. He was 94, managed his own money until he was 101, finally passed 107. Good life. So I'm never going to retire. So that changes my calculus. But for the average person who says, okay, I'm going to retire. Although my problem with that, Anthony, do you remember Dennis the Menace cartoons?
I do.
So Dennis the Menace lived next door to Mr. Wilson, right? And he was talking to Mr. Wilson one day. He says, Mr. Wilson, what's retired? Mr. Wilson says, tired yesterday, tired again today. I don't want that. So, but to answer the question, 65, we'll use that as retirement age. It really should be, 71 or 72, but we'll call it 65. At 65, just on math, you got at least 13, 14, 15 years based on life expectancy. And then I would still try to focus on equity and being an owner of things as opposed to a loaner and owning bonds.
All right, listen, Mark, you are one of the big thinkers. I'm going to invite you back to talk about AI in the future and venture capital as well, because I know that you're onto that space too, and you're one of the visionaries. And I give you a lot of credit because in addition to being a visionary, you're also a great teacher, and you're willing to spend the time and the energy to explain what's going on to other people. So. As always,
appreciate those very kind words, and I appreciate it. And it's funny because you're leaders who literally want to change the world and are inventing things. Like one quick one.
I get it.
We're talking to we do a lot of chip investing. We have chips that enhance AI and do all kinds of things. So one of the challenges with chips is you got your memory over here and you got your processor over here, and the faster it goes, the electrons go back and forth between them. Right? That's what causes the heat. So. Literally, I'm talking to you, and my computer's sitting on a little box because it gets so hot that I can't leave it on the desk. So, long story, he's like, well, what if we didn't use electrons? What if we used photons? Then there'd be no friction and no heat. And they're like, you can't do that. It's like, well, why not? I could do this. He said, well, you can't get the photons into the silicon. He said, well, I could deposit